Yo, hold on, let me make sure. Got everything set up. Was good. How many people we got on? We got 6 people, I think. Not bad. Let me make my camera just a little smaller. It's a little big. Let me just move it like that. Yeah, that should be good. All right, what's good, y'all? How are y'all doing? How's you guys' trading week? Everyone should be able to hear me. Very important call. I kind of feel bad. Kind of feel bad for anyone that's not on this one. Because this is really going to break down kind of the overall sentiment of what I'm looking for every single day in New York session. It's more technical based, like I said. The next call can be over psychology, like I said. But this call is actually very important because there's 4 phases of New York session, and it happens every week. It's always the same 4 phases, and you have to kind of understand where you are, what your key levels are, and what you're going for, right? There's a lot of important things that you gotta go over when it comes down to pretty much what goes with New York session. Let me just refresh. Can't see how many live viewers are there because YouTube is really bad at updating viewership. But whoever's in will be in. Our last stream was the most viewed stream on the channel, which is pretty lit. It goes to show that a lot of people are really requesting these type of calls. They're really wanting to see kind of my point of view as someone who's been earning consistently throughout the futures market. I'm going to kind of break down the 4 phases. Now, the 4 phases that we're all going to need to understand is going to be, you can take a screenshot of this if you want. These are the 4 phases. There's only 4 sessions, profiles that happen. There's continuations, reversals, consolidations, and seek and destroy. I'm going to leave this on the screen for like another 5 seconds. Pretty much, I'm going to just break down kind of what all these mean and kind of the plays that you could have taken with those inside of the live markets. So today was a very, it was kind of a choppy opening. Not gonna lie, the opening was kind of choppy. I'm gonna just go basically back over to here. We had a very choppy opening at the beginning. We had price consistently trying to fight bullish and bearish. You can see all the volume that was spiked. It was very choppy, to say the least, at like the first 5 minutes of the opening. But for me, actually I should probably replay this. Kind of show you my thought process. So obviously we have New York high from previous day still resting. That's a key point of liquidity. That's a session high that we never took out of the markets. So I was still looking for a reaction to the downside here. Only because like I saw a lot of Instagram traders that are like, dude, buys were like generational. They were set up. They just didn't play out. And I'm like thinking like, bro, they just didn't look good. Like there was people taking this inverse as if this was just going to be the buy of the day. I mean, bro, if you see price action like this and it's this choppy and disgusting, you don't buy here. So again, I don't understand why so many people are trying to buy here, especially like on the bigger time frames. Move this out of the way. It's just been very choppy in general. Like the whole overall market has just been consolidating since pretty much the start of the week. Not that there wasn't any good plays. There was definitely some really, really solid plays, but more macro traders probably hate how this week has gone so far because it's just super choppy, right? Overall, this is more of like what we say is the consolidation profile, but for me, I'm not obviously looking futures from a week-to-week standpoint. I'm looking at it from a day-to-day. I'm not focused on really what the week's going because, again, I'm not really too concerned with the macro. The highest I'll go is 1 hour or maybe like a 2 or 4 hour for a certain fair value gap. Say I could be targeting to get a reaction, but you can see this fair value gap has been tapped a lot. So for me, again, I don't care too much about macro here. For today, at least, we had a very nice sweep of the previous day's New York high. Obviously, everyone knows you could target the next sessions down. You have London, which was the only one left to grab. By the way, very nice buy right here. But I'm gonna break down the reversal first before I go into continuations, because I like starting with reversals just because that's what happened today. Reversals, super nice. You had this inverse fair value gap. You can see obviously this candle slammed through it, and for me, my brain was already thinking, okay, cool, I'm looking for shorts. I'm not too worried about buys anymore because one, we've already grabbed this session liquidity. We had this wick grab previous liquidity, and you can see that the candle shot up, but it was a little body, meaning that we absorbed all of the orders pretty much from the left. So now all that we were worried about doing is just giving something called a CISD, which is a change of the state of delivery. You can see that this candle slammed below. You get your change of the state of delivery, meaning that we were previously giving bullish price action. Now we're about to give some bearish price action, right? So pretty much all that we're looking for is just a retest of this trap candle. Because for me, I'm not wanting to enter right here. Just I usually want to enter off the candle that closes right, like right through the inverse fair value gap. But for me, my brain automatically sees a trap candle. I know more often than not, it's not going to leave that behind. And I will be okay with just being a little bit more patient, waiting for market to, obviously, you can see market came back. This was your first tap with this wick. Came back again, boom, this was where I entered. I didn't fully hold towards London low. Obviously, you could have. I didn't need a super big day today, so I pretty much only targeted kind of this little order block right here. Around there was about a 1 to 4. Again, if you have a good win rate, that's what matters more in trading, by the way. It matters more in fundeds if you have a good win rate than you have a good R to R. Because there's trailing drawdown every single day. It doesn't matter how insane your R to R is. You don't need 1 to 40s, bro. Or 1 to 10s, or 1 to 8s, or 1 to 6s every single day. Even if you were a 1 to 2 trader, but you have an 80 to 90% win rate, bro, you're still making more than all of those people that have crazy R to R but terrible win rate. Because one, their psychology is going to get cooked. Your psychology gets diminished by trying to have extremely tight stop loss, trying to force a massive move that you don't need. Like, you guys see, like, traders like PB Blake. That's one of the guys. That's a trader. There's a bunch of other traders. I'm going to turn the music off because now I'm getting ads on YouTube, and that's really annoying to hear. But you'll see traders like PB Blake or some guys on Instagram, and they go for, like, 1-to-1s, and I see people clowning them in the comments like, hey, why is he going for a 1-to-1? He must suck at trading. Bro, he has like a 90% win rate. Like, a 1-to-1 with a 90% win rate is 9R out of 10. That's very good. Especially for a month-to-month or week-to-week basis, that's really, really solid. So what really matters is that you don't need this entire move, bro. You don't need to go all the way down. Like, obviously, this is the nice target. Like, this is, this is what you want to play. But, again, you don't need it. If you can at least secure a 1 to 2 RR every single time you win a trade, bro, you're going to be consistently profitable as long as you're not over trading, revenge trading, and just really being stupid in general. Someone said, so I was selling NQ, but got taken barely got taken out by New York High. Meaning you were probably selling over here already. After that, I personally don't enter anything. I don't enter in the markets at all right when New York opens, because either there are times, yeah, it'll fly right to your TP if you're already in a trade, but there are also many, many times, more often than not, you're going to get hit out of the market, bro, and it's going to suck. It's going to feel painful, and then it goes your way that you want it anyways. It just needed to take out some extra liquidity. Like, you can see all the volume stacked in here because hella people were already waiting for this short off of the session. Like, they were like, all right, cool. Nice, nice entry for sells. Cool. Now we're just waiting. Right? But in the reversal model, you don't care what happens realistically with that first move. You're wanting to see after the New York session open. Cool. The open took out liquidity to the left. We're still looking for shorts because we closed through this inverse for value gap after this. And then obviously you could target your next session, which is going to be your TP point or whatever fixed R to R that you want to have, or a fair value gap. There are going to be times where price comes to a fair value gap. Say market could have done this and just respected it and then continued higher. I mean, that happens too, right? As long as you can secure a certain fixed R to R every single setup, you're good. Like, that's what matters. If you're just not being an idiot, you're following your trading plan, and you're at least securing profits no matter when you can, every single time you can, you're not going to blow accounts consistently, bro. You'll be good. So this is pretty much what kind of happened with this market. Silver did the exact same thing today. I took a gorgeous sell on silver. I had this sell, but this was the main sell that we were looking for. On silver, by the way, I have all these marked up just to prove that this exact model that I trade is very consistent. It gives you like multiple plays per session. Like you had 4 different setups in New York, and then you had 2 different setups that got respected completely in Asian. Like this model is what I believe is the best model for futures. So for this, we had our 7:30 open later in the session, around over here. But if you're already looking at kind of higher time frame potential, you have this obvious big fair value gap. Price had a very aggressive candle down. You can see we had Tokyo high already taken. London high comes back. Pretty much what London high was doing, it's just displacing. You have this very aggressive candle with an insane amount of volume. I'm looking inside of this fair value gap, meaning this is my key level, right? Your key level is your big time fair value gaps. So I see that we respect it. Cool. I'm looking for shorts because we had this ginormous change in the state of delivery. We're still looking for sells until price on a smaller time frame hits a session or this fair value gap down here. That's why I have it marked out with these lines. Until we can see something on a bigger time frame get managed, cool, we're not waiting for that. And gold buys, do you think we could take out New York highs? I will talk about that in a second. So pretty much we had a beautiful play on silver. Comes to this fair value gap. And what you're looking for is you want to see liquidity swept. Boom, this candle swept liquidity, cool. You have your inverse fair value gap. You see that this candle slams right through it, meaning that, okay, now there's more bearish selling pressure than buying pressure, meaning that this direction in general is going to have a higher win rate than, say, someone's going to try to mitigate this trap candle and push it higher. Because we took out that higher level, key level, inverse, cool. Now we're looking for sells. You can obviously, like I said, you can always target, you know, those next legs, aka the next sessions. London, personally for me, I don't need to get all that. I only needed a 1 to 3. R to R I'm fine with. Also, price comes back right here, tests a fair value gap, and respects it. And if you don't know why price respects a fair value gap or how it can respect it, you want to look at 2 things: a CISD, meaning like a break of structure, and how candles are reacting to this. Seeing that these candles have rejected this one time, you go to lower time frames. I can make this more apparent for you. You have this fair value gap, reject, reject, no clean body closing through, rejected multiple times on the 1 minute. You're already bearish. Price has already created a new lower low compared to this low. You know it's going to keep going down. Pretty much silver was very nice. If you guys know Kevin Navarrete, he took the same setup. He's a really good trader as well. I usually like to top it up with him, kind of pick his brain. We pretty much trade the exact same with inverses. So, you know, seeing someone take the same setup as you is pretty cool. Because it just lets you know that you're on the same type of timing. But look at this model. I mean, this model is even if you, bro, I'm telling you, it doesn't matter about how high your R to R is, bro. It doesn't. Secure your win rate. Like, look how many times this model played out before I move on to continuations and seek and destroy and consolidation. Very nice, clean. Price swept this internal liquidity. Didn't take the ultimate low, but we don't need that. We have inverse fair value gap. You can see that this candle right here, this little one, closed right through it. I pretty much bought based off of this candle. I would have bought based on this candle. And obviously, you can set your stop at this previous candle low if you want. And then you could target a 1 to 2. Or obviously, you could target fair value gap here. You could target a trap candle. You could target something, right? You don't need to, you know, you obviously don't need to just keep trying to take all these highs. You didn't need to take any of these highs, but we had a reversal model, open evasion. This is the last reversal model I'll do. Open evasion, beautiful reversal model. Basically tapped right into that previous New York high. Gave you, right here, the 2 minute inverse for value gap. Saw this candle starting to slam. I marked this real time. I didn't take it because I set my lockout every New York because I want to stay disciplined with the time and sessions that I take. But I did have this market. I marked out. As soon as I saw the body just drop right here, sell. Honestly, you could take a 1 to 3 here. The 1 to 3 was pretty safe. I mean, this was insane movement at the open. Maybe show the times for you guys. 16 o'clock Arizona time is when it opens for me. Basically, like 6 minutes in the session, it just tanked. But again, I'm just proving a point with win rate. So I'm just showing you the lower R to R. Imagine if you just wasn't trying to have an insane ego and you decreased your R to R a little bit for a higher win rate, you'd be more profitable and you would have less stress trying to trade the markets every single day. I can guarantee you it. Same thing here. 5 minute fair value gap, or inverse fair value gap. Price swept all this liquidity. Right? You had New York low already previously taken, meaning that you're trying to look for an area to be buying at. You see price has rejected this fair value gap right here on the 5 minute multiple times. We don't care about that until we see a sweep and then an inverse, sweep, inverse, boom. And if I was in this right now, I would have caught the whole bottom of the session so far, and this would have kept going. Right? I mean, I'm telling you, this is a model that really works, bro. It's not just a fluff, blah blah blah, like, oh, he's just showing it because he can't. Like, no, like this is literally how I'm entering pretty much every single time, unless it's like a trap candle without an inverse, and I know that, okay, the directional bias is still accurate, but I still want to see this specific model 9 times out of 10. You get your win rate up to that 70 to 90% range, bro, you're going to be getting withdrawals. That's why I've been getting withdrawals, is because of that. Now, we're going to pull up. Let me know if anyone has any questions, because I know I'm going kind of quick. I do have literally like 4 completely different session profiles to go over in this call. So I don't want it to be like I only get through 2 or 3 of them, and it's like, dude, blah, 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 I didn't know what you were talking about. Like, these ones are, this consolidation, there's not much to talk about, because if you just read basic market structure, you just know this is a day that you just don't want to enter. But continuation. Continuation is very nice, specifically in London, but there's also really good continuation models you can get in New York. We had a continuation model. What day of the week did we have? Monday. We had a good continuation model. I remember this. Let me basically just go back in time for y'all. Continuation model, right? So price was, we had London low already took out Tokyo low, right? Which gave obviously a bullish momentum, indicating that you could have had a bullish New York. New York came back for London, and some people would say like, well, isn't that a reversal? Not technically, because literally in the previous session, we were already going this way anyways. A reversal is when it's not going that previous way anyways during London. Meaning, like, look, we had London going bullish. We tapped into previous session liquidity. We went to the opposite of London, right? Versus right here, we had London going bullish. Basically, New York just comes back and then continues bullish. So you're not even looking for sells. There's no reason you should be looking for shorts here. And basically, you can get a nice little model right here. Inverse fair value gap on the 1 minute, marked out. Took previous session. Pretty much you're going to be entering based off the closure right here. This is when I entered. The closure of the inverse fair value gap. Obviously, you can hold it below this wick if you want. Again, you don't need a 1 to 7 RR. I'm not stressing about that at all. I took my 1 to 4. Again, I didn't even need to take a 1 to 4. I could have just taken it to London high. Or I was really trying to hold out for Tokyo high, because obviously the session TP continuations are going to be TP1, TP2, TP3. So you have 3 TPs on the board. These are all your targets that you're pretty much aiming for. Again, don't get greedy. You only need that first target, bro. You don't need to get all 3. But there are going to be days where if you need a big day, maybe you can try to go for all 3. There's going to be days where all of them play out. But basically, this was literally the open move that you needed to catch. We had 7:30 tank. Again, this is why I say wait for the opening. Wait for that first opening 1 to 5 minutes. 1 to 3 minutes, whatever you want to do. Because when this rips, maybe someone was trying to buy here at this like order block or something, bro. You could have got smacked so quickly. And a lot of people see this open. I'm going to call some of you out because I know some of you are like this. You see this open, you're like, all right, cool. Volatility is clearly going to be short. I can get a nice maybe 1 to 2, 1 to 1. Have price just tank a little bit more just because it's so bearish at the open. When you don't realize that it's only bearish at the open because it's trying to touch one session liquidity and it's giving you a big setup, right? It gives you a ginormous setup to pretty much get into the market and continue higher, right? So, again, big players got in here. They got in here. This was the bottom, right? Yeah, you got the bottom, boom. For the continuation model, you're looking for... Why did that delete? Oh my gosh, it's deleted, bro. Like, give me uno momento. Alright, we're back. So you have your TP1, TP2, and then you have your TP3. Can you explain how you see inverse fair value gaps? So you know a fair value gap, right? A fair value gap is pretty much when you see a gap in the market. For example, I don't know, let's find one. Or one that actually makes sense. Maybe let's go on a higher time frame actually for this. Fair value gap, cool. You see the price has a gap in the market, price comes back to rebalance, continues lower, right? Cool. Now think of this. It's the exact same type of gap, but it gets disrespected. Meaning that we want to see an institutional candle like this with a lot of volume make a large displacement. Bro, I wish everybody was on this call right now because I feel like, bro, everybody could utilize this, bro. And dude, there's people like RJ that have been utilizing this. He got his payout, bro. Like, I'm telling you, this works, bro. I'm not just saying this just to say it. This is the displacement with a large candle, basically tanks down, leaves a ginormous gap. You're looking for price to close above this gap? Cool. You are free to be buying. Obviously, you could risk this much if you want. For me, I knew this was the low of the day. We took the session. I'm not worried for this to come back and hit me out again. Unless it was a seek and destroy type of day, but most days are not a seek and destroy type of day. So I'm targeting either a fixed R to R or I'm targeting all my sessions based on what London did. So if London was bullish the previous day, market sentiment is still bullish. If market sentiment is still bullish, right? And it's already following the exact direction back to where London was the previous day. Okay, cool. Then we're having a continuation day. If it's not, it's going to have a reversal day. Do you ever trade off of higher time frame manipulations on gold or NASDAQ? Sometimes I'll do it on NAS. I'm not really a gold trader. Gonna keep it a buck. I'm mainly a NAS and silver guy. I'm an NQ and silver. Silver to me is so much cleaner than gold. I really don't like gold, to be honest. I don't know what it is. Maybe I don't even know. I can't really give you the explanation for it. I'm just not a fan of gold. I like silver more. Silver has cleaner gaps usually, and silver just has cleaner price action most of the time, in my opinion. Especially as of late, dude. Silver's been trading gorgeously, man. Very beautiful setups that's been giving. So pretty much, I'll look at the higher sessions or the higher time frames, but I look at higher time frames like I said for my key levels, which are those fair value gaps. Looking for those higher time frame displacements or higher time frame overall bias for the day, right? So now I'm just looking for like, all right, cool. What can we salvage out of this? Back in November, gold price action was good. Gold is always good in November. That's the one thing. November has been some of my biggest months for the last year and a half. November has a really, really good price action usually. It's crazy. But we're gonna go over number 3, consolidation. You're not gonna be trading this time. You're just not. You're sitting on your hands. Someone said is engulfing volume a part of your setups. Yes. I mean, you like to usually see an engulfing candle than engulfing volume. If you're playing more of like the trap candle setup, like trying to get a quick 1 to 2, 1 to 1, 1 to 3 off of this, you could play like engulfing candles with engulfing volume and just take little buys up. But usually I like to play the inverse most of the time, but obviously there's gonna be those super nice engulfing candles, engulfing volumes that you can play. And I'll always make sure to look for them. Like, it doesn't really go unnoticed. So, number 3, like I said, we have consolidation. You're not trading at this point. You're not. The only times you're gonna get a setup in consolidation is when you get a higher time frame manipulation or a lower time frame displacement that sweeps something and then it gives you an inverse or gives you whatever your confirmation is, right? If it's like literally squeezing the whole day, you're not entering, bro. Like please do not be trying to trade. Like let's go for a good example. Let's look for a day where it was just squeezing the whole session. Prime example was Tuesday. Tuesday was a very squeezy type of day. Like, it looks pretty similar to this. It was a very squeezy looking day. Where price is not really giving an overall indication of what it's wanting to do. Obviously, I still smacked 2 for 2 on this day, but I'm telling you, these are the days where you're gonna probably lose more than you're gonna win. Price action was clean only on the low time frames. If you're looking at any high time frames here, if you're a high time frame trader in general, do not trade these days. Ever. Just don't. You're not going to enjoy it. You're going to be seeing price hit your stop loss quickly, or it's going to take forever to hit your TP. Don't. You're not going to enjoy it as much. And for this day, only reason why I took this sell was because we had this fair value gap. Let me go to replay so I can show the session's liquidity. We had this fair value gap. My target was Tokyo low. We had a SMT with ES. I'll go over where the SMT is in a second. We had our fair value gap, right? Price never had not even a body touch inside the fair value gap. This is how I knew we were selling. 1 rejection, 2 rejection, 3 rejection. New York opens. I know some people lost on this New York open wick because they were trying to have a stop loss too tight. I know that there was a couple people for sure. I just know it. I know there was a couple people for sure that had a way too tight stop loss. Probably risking too much, and they got hit out here, and they had a brutal, like, psychological day after that. They're like, dude, super annoying. Like, that was super whack. But as long as you just held either to the session or basically maybe the previous body, you could have done that. I personally held it a little bit above the session. I wasn't risking too heavy on this. Price obviously came to the session. You could technically also say that this was a continuation, because we didn't take this session yet, right? We didn't take this session yet. Or no, this would be more of a reversal, because London, yeah, this is a reversal. London was going bullish. New York opened bearish. That is a reversal for the open. And then once price tapped into a 15-minute fair value gap, gave an SMT, which, like I said, if you don't see, this is, yeah, I think I marked it on MES. If you don't see MES take the low, right, that means that bullish price action is going to be a lot stronger than you think. Right? Because these two are in confluence. They work together. They're the two pairs that move the exact same. Dow does really whatever the hell it wants to do. That's just the reality of it. Yeah, I never took this sell because I already hit my wins. But these two go hand in hand. Once you see that, okay, cool, MES is so much stronger because we failed to break this low, maybe sells are shaky. Like, maybe they're not as realistic as we thought. Maybe this is not actually going to tank. Maybe this is going to come back and maybe do a stop loss hunt. Do like a little seek and destroy type of moment. That's where my brain was automatically clicking. I waited. I don't have the upgraded trading view. I have it on Top Step. But this was a 30-second inverse fair value gap. It blew through it. Like, this candle was psychotic. It was the fastest, like, 1 minute candle I've seen. I'm like, dude, this thing shot up. And if you missed this entry, this is actually what I'm going to show you, is how exactly that you know that the big players entered the market. If this fair value gap does not get rebalanced and retested, there was so much money pumped in through here. This is guaranteed, almost guaranteed to fly if this was not rebalanced on this next candle or the next candle after. This is when you know big players are in, especially with the volume. You can see the volume is the biggest volume of the open. But the fact that we don't rebalance this fair value gap like we should is meaning that there was so much money pumped through here. This is just going to gladly glide up to the take profit. Just gladly glide. And you can see that it did. I answered off of basically the CISD, meaning that this candle, once I saw this body start to close right around here, live time, I answered. Why? Because I knew that, okay, cool, we got our break of structure. We're good. We got the bottom of the session. We got our break of structure. I'm okay with putting my risk here on the table because guess what? Even if it goes a little bit into my stop loss, it should rebalance this fair value gap and still continue higher anyways. It should do that. Just from statistics, it should do that. Because we have so much volume in here. Even if it did retest. We have our CISD. Right? So, again, what can you target? You're targeting the London high. You could target the New York high. They were basically right next to each other, bro. I targeted just a little bit beyond it. I honestly don't even remember why I put my TP here. I just put it there, and I just kind of set and forgetted it, honestly. Because I was like, dude, I don't need to look at my phone. I'm chilling. Like, we're vibing. Vibing in the session. And then after that, this is when it becomes this. This disgusting consolidation where, like, you just don't want to be trading anymore at this point. You know, once you see that there's like little to no fair value gaps on this side of the market, you know that this day is gonna be kind of dog poop unless you just are really okay and good with looking at super micro time frames. So if you're not really good at that, you're really gonna hate consolidating days. You're really gonna hate it. What is CISD? CISD is a change in the state of delivery, which means price. Also, on the 3-minute, someone asked me, do I look at engulfing candles and engulfing volumes? I'm so glad you asked that. This was the last piece in like the stone for me. You can see that this candle gave a CISD. It broke this lower high as well. Also, engulfing candle with engulfing volume, meaning that bull price. Again, this just reaffirms the fact that I said that big money is now in. Like, it's super cool in trading that you can explain something 5 different ways, but it makes sense every single time because everything really goes together in trading. Either whether you're an ICT, SMC and ICT are the exact same. It's just slightly different concepts. I still always say I'm an SMC trader. But, I mean, everything goes hand in hand here. Target the session, cool. And the last one we're about to go into is search and destroy. I need to answer some questions real quick because I'm seeing this chat move. Do you still trade with Valentino's concepts? I do apply some of them, but they don't relate to futures as much. They're more macro forex trading or like higher time frames, like the 1 hour to like the 4 hour. I'm never looking at those time frames. So literally everything I'm teaching you on this call is what I back tested. Like I back tested all of this. Back tested all of this. Everything I'm giving you was because I actually decided to sit down and understand and try to learn this skill set because I knew how much power was in it, bro. And if you are a day trader and you are actively not looking, you know, at the sessions, you're not looking at the charts, you're not trying to back test, bro, you are cutting yourself dry. Like, you are cheating yourself, bro. You're cheating this skill set and potential you realistically could have, bro. On FX replay, yeah, and also just regular like select barring through TradingView. I did both. So still learning volume, but just wanted to ask, since gold has no engulfing volume, meaning more sellers are in. Are you talking about currently? I'll look at gold in a second because I know someone asked about gold buys. So much sauce, I appreciate it. Oh, that's just Sai. I just read the name. What's good, G? I trade ICT and this was OT logs. Yeah, this was, I saw so many people on Instagram complaining about this little inverse fair value gap that failed. So many people were so tilted, but we didn't tap into this 15-minute fair value gap. I was waiting for this fair value gap to get tapped. I'm like, bro, this setup looks good. If I get left behind, so be it, bro. I don't care. And it came back, tapped into it, rejected it. I also wanted to wait and see the CISD. We got it. Cool. I got in. There was no CISD for me to get in here in general. So the confirmations were less in general. Again, I like this. I always stress it. Take the setups that have almost all of your confirmations, bro. Stop taking half-ass setups or setups that you don't actually know are going to play out. right? Like there was no CISD here. There's no breakage structure. There's nothing to validate. Just because you have an inverse, this doesn't mean it's gonna just automatically go higher, right? Like I see all these Instagram guys that are like, by the way, they sell a course, or like they sell like signals to all these people, and I'm like, bro, I have way less experience than you, but I'm automatically knowing this. Like, if you can't tell that I'm hungry for this skill set and I'm guaranteed gonna just dominate, I don't know what does, bro. That's no ego. I'm telling you, anyone who just develops a winner mentality, trying to really get this skill set, and you're passionate about it, bro, you're going to get it, bro. Trading is not like some unbelievably hard skill set to learn. It takes time and it takes a lot of experience. And if you're not willing to fail a lot, you're not willing to find a system that really does work for you, then don't do it, bro. Because this is where the discipline game comes, bro. I'm telling you, bro. We're going to go over... I got super passionate right there. I was like motivated as fuck right there. We're going to go over Seek and Destroy. I got so motivated right there. It has to be engulfing within one candle to close validate usually. Yeah, I usually like to see that first candle after. Or maybe the second, but usually the first. Let's look for a Seek and Destroy. Let's look for, like, disgusting price action. Where it's just going for the low, going for the high, going for the low, going for the high. I mean, technically, this day is also a Seek and Destroy, bro. I low-key might use this example for both, because it really was a Seek and Destroy type of day. Price came for Tokyo low, then it came for New York high, then it wanted to rebalance the London low, tried to rebalance the Tokyo high. I mean, it's just bouncing between these sessions left and right, bro. It was twerking on all these sessions all day, bro. Honestly, you could say that this wasn't even just fully a consolidation day. This really was a Seek and Destroy. This thing was just going crazy, trying to get everyone out of the market. Like, bro, all over Instagram, people were like, dude, I got bodied today. I got bodied today. Like, bro, this was a Seek and Destroy day, if I'm really thinking about it, bro. It just kept going for every session that it could grab. Like, it just kept going. It said, nah, screw y'all. I don't care if y'all buying. If you're selling here, you're a bum. Came back, smacked you out of the market. Did it over and over, bro. You see this buy right here? Look at this. You see this buy right here? Look what the market decided to do this day. I don't really care about the people buying here. Let's go ahead and smack them out of the market real quick. This is Seek and Destroy, bro. This is like when you need to be taking low R to R setups this day. You don't need a 1 to 20. By the way, real traders don't force big days. They happen. Big days come, bro. They don't... like today was a big day on Nas. That whole tank... Today was a big day. Today is a big day. But most days are not going to be big days, bro. Take your R to R that you're comfortable with, or whatever profits you have for the day, and be comfortable, bro. Because days like this, you're trying to force a 1 to 16 because you have an ego and you think you're some trading god. You're cooked, buddy. Like I said, what did I say at the beginning of the call? If you take a 1 to 2 and you're happy with that, dope. Bro, this gave you a 1 to 2. Perfect 1 to 2. It was perfect to the T. Take your setup, or take your R to R, bro. Take your win rate. Take your win rate over R to R. You're not on a live account. Live accounts are for crazy R to R because you can hold for days to weeks. You can't hold on funded accounts. You gotta take the win rate. Because you have a trailing drawdown every single day, and as soon as you hit that, your account's blown, bro. That should not be your goal, bro. Take your win rate, or take your R to R. I just said it backwards. Take your win rate. I don't know if I'm dyslexic, but I just said it backwards. Retail was in Nasdaqian trenches that day. Yeah, if you were a retail, like I was on TikTok earlier, bro. Some people don't deserve to be teaching others. I saw some brain rot, and they weren't trolling either. They were dead ass, like straight pure emotions. Like they were like, dude, how did the buys not play? It was there. And I'm looking at the market, and I'm like, where the hell were you trying to buy today? Besides maybe here. He was trying to buy, like, somewhere in the first hour of the session. Like, he recorded it and uploaded it on TikTok. I'm like, buddy, there was nowhere for you to enter. You just literally wanted to take an L. Like, there was no confirmation. He just, I'm not kidding. He literally just did something like this. It's like, 1 to 2. My mentor said I should go for 1 to 2. He got, like, the smallest reaction. He's like, alright, we're in. Bro gets bodied, like, 10 minutes later. I'm like, bro, you are ass at this shit, dog. Like, respectfully, you are butt. Please join Powerhouse or find a mentor or someone that's going to teach you the right way, bro. Like, stop being a bot, bro. Like, some people are straight NPCs, bro. Straight up NPCs. It's not even funny. I see some people, they'll do the dumbest stuff on the charts and then they'll wonder, what went wrong? And I'm like, bro, the fact that some of these people have this much experience and they're still doing, like, I'm not saying you can't lose in the market. Losing days are going to happen all the time. You're going to have losing trades all the time. It's going to happen. It's part of the game. But making mistakes like that, what I marked out, and other things, bro, you should never be doing that. Like, you are just garbanzo. You are just butt awful, bro. Again, this setup, bro, I'm telling you, it plays. And it pays, bro. You take the sweep. You can see that price was already bullish. You have your change of the state of delivery right here. Basically, oh, I mean, you honestly had it right here as well. This is actually the more obvious one. You had it right here as this high closed above. Price came back to retest this trap candle. It's also an order block. You could have took a buy here. Again, I like the inverse. The inverse is just a sexy looking setup, dude. Like, I got feelings for this setup, bro. I'm like, she looking good, man. I see the inverse. I'm like, let's run it. Let's run it. Run it for a 1 to 2.5. Run to 1 to 2. Whatever you want, bro. Run the R to R that you think that is going to give you the highest win rate. You obviously had this candle sweep all of this liquidity. Tap into a higher time frame fair value gap. Yep, you can see this big 3-minute gap. Rejects right here on this candle. You can see that it didn't close below, but this wick, you can see that it moved all the way up here and then it started coming back down. It rejected this. You can now look for the closing of the inverse. Once price starts closing up here, pretty much like right when it started jolting here, I marked it up, shot up, took it here. Again, if you don't believe me, bro, you got another play right here. Obviously not as clean. This would have been the setup that, like, it sniffs your stop loss. Like, literally puts nose against your stop loss and takes a big whiff. You can see that it doesn't hit you out here. But, bro, my damn would I have been like, yo. Like, bro, come on. Like, I wouldn't have been raging, but I would have still been like, yo, come on, bro. Like, emotions happen, bro. You're still going to be upset sometimes. You're going to be like, dude, come on. But, I mean, hey, still played, bro. As long as it doesn't hit that stop loss, bro, you're good, man. Let's refresh this chat so I can see kind of the live chat. Is that making sense for y'all? The consolidation, seek and destroy, reversal, continuation. If anyone wants me to run through one of them one more time, obviously you can do that. If anyone wants to look, oh, someone wants me to look at gold or something like that. I think they say gold buys. I think it was Jason. Did this take the high? Yo, that is a dirty sell. That was filthy, dude. Bro. Nobody could ever tell me that the market does not move by session-based liquidity. What is this? Price comes 0.4 points above previous gold and tanks. Is anyone going to tell me that it doesn't? Like, actually, tell me that it doesn't. Please tell me it doesn't. Because what is this then? Like, what is that? You could never tell me that it doesn't move based on that. You could never tell me that. Yeah, bro, appreciate this. For real. You do this every Wednesday? Yes, I do this every Wednesday. Well, there are sometimes I have to miss it. I missed it another time recently because I had some family issues, but in general, it's going to be every week. And every week, I am launching like a 5-part boot camp. Well, not yet, because technically I could do the second part, the psychological part, outside of it, and then I want to mix like the whole strategy together in like a 5-part, and then also upload it to my own personal channel. I'll probably do that. So, yeah. But I mean, the higher time frame manipulation, it was here. Oh, I thought that hit that fair value gap. That would have been disgusting. Nope, it took out the New York high based on this. I mean, if you were looking at the sells at the open, this is how you would have approached it. You can take your 1 to 3, or you can take your 1 to 2. Someone tell me that this setup doesn't work. I've shown you 10 different examples, bro. Like, bro, come on. This setup is so consistent, bro. If it has the right... Here's the thing. Don't just take the setup because you see it. You have to use it with confluence. Is it taking a higher time frame manipulation? Is it doing something based off a session-based liquidity? Is it sweeping liquidity in general? Right? Because if it's not doing that, you're not taking it. Like, you can see here, like, yeah... no, this was actually a good one, too. This one would have got you your 1 to 2 as well. This one would have got you probably a 1 to 1. This one would have probably got you a 1 to 2. I'm telling you, bro. It happens on repeat. But the bigger moves, if you're wanting a higher R, it's going to be based on that session. This takes that session, tanks, price, comes back to this order block, retests, buys. This shit looks disgusting, though. Silver, dude, silver is so much cleaner, bro. If you're a gold trader, no. Let me stop you right there. If you're not used to risking a decent amount, silver will blow your account so quick if you do not know what you're doing. Let's pause real quick. Maybe you start with 1 micro and that's all you do. Literally 1 micro is going to be enough risk. Trust me, it's going to be enough risk. Trust me. Do not trade silver if you are a noob. Let me do this so nobody can go in the chat and be like, Jack blew my account. Like, yo, if you are not an advanced trader, an intermediate trader, someone with consistent results, do not touch silver. Don't. You don't need to be blowing all these accounts if you don't know what the hell you're looking for. Top Step still restricting it too right now. They're not restricting it. Bro, I entered like 5 micros earlier this morning. Are they restricting it like based on minis? I took like 5 micros on that joint. Nah, for real, 1 mini on silver. I'm pretty sure they're only restricting it to like 2 minis on silver. Bro, who the fuck is complaining about taking 1 mini on silver? You would make like 20 racks in a trade. Or lose like 10 racks if you lost. I meant for like 1 mini. Yeah. Who's complaining, bro? If they're limiting silver to like 1 or 2 minis, bro, it does not matter if you're a silver trader. For gold, different story. Gold has way less risk than silver. Gold has way less risk than silver. Way less. So you would be... I've seen a lot of people been bitching about gold, and I can understand why. Y'all could barely enter more than maybe 1 to 2 micros. I've seen it based on your P&L. But if you're trading silver, you do not care. I know, you meant gold. Oh, you meant like in general? Restricting? Oh yeah. Well, I don't trade gold in general, so I don't care. I don't care about gold. I am not a gold trader. I will never claim to be a gold trader. Silver has my allegiance, bro. Out of all the metals, silver is my babe, dog. This thing's my bread and butter, bro. It moves so much cleaner. This is disgusting. This is consolidation. I'm not entering here. I'm good off this. This, beautiful sweep, 5-minute inverse. I'm entering that hoe. I would be entering that joint. Wait. Pause. That sounded crazy. Well, not a pause because that's... Never mind. I'm going to cancel myself if I continue that. I'm not going to continue that. I'm going to cancel myself. Like, I would get canceled for saying something bad. Let's not do that. I'm not trying to be canceled before I even get any students. Well, you can't cancel me if I don't care, you know. Interesting. Yeah, so pretty much it's mandated on gold to risk less. I don't give a shit about gold, so it doesn't bother me. But if you trade silver, you're sitting nice. If you trade Nas, you're sitting nice too, dude. They're not gonna patch the Nasdaq-aroni, dude. They're not gonna patch the Nasdaq-aroni and cheese because like everyone trades this pair, dude. Everyone trades this joint. They're not gonna patch this, bro. And if they do, then is what it is, bro. But I severely doubt that they're gonna patch this. Does anyone have any questions? I feel like I just given out a crazy amount of sauce based on technicals of what you could look for every day. How to catch a reversal, how to catch a continuation, when to know when not to trade, meaning if it's consolidation, or seek and destroy. You can either take the buy or the sell, but your confirmations have to be there. I feel like I was just like dialed, bro. Like. Should be good. We got about like 3 minutes left on the live because I'm gonna do like an hour call. I usually like to leave it at an hour. You gave a shit ton of sauce, bro. It shouldn't be free. I could start charging. I mean, I could start charging. It doesn't. You know what? That sounds like a good idea. That's free money, dude. I could start charging. Jack, you are a character. I'm just myself. I'm not a character. Thanks for your time. Plenty of gems. I appreciate it, dog. I'm just being myself, though. If anyone knows me, I'm just goofy, bro. I'm just brain dead. I'm a brain dead guy that makes money clicking buttons. Eyes. What? Oh, you meant like I could be charging. I could. But then again, I don't want to seem like I'm a course guru seller. I'm not that type of guy. But if anyone doesn't have any more questions, I'm pretty much just going to wrap it up here. Again, if this is viewed the second highest or first high, this should be the most viewed. This should be the most viewed stream on the Powerhouse University page. This should be the most viewed. Meaning because my last one was the most viewed, this should be more viewed than my last one because I went so much more ham. So much more in depth, giving to straight sauce, like straight. This is the straight printer, bro. Again, like I always say, focus on your win rate. Stop trying to force yourself to have crazy 1 to 20, 1 to 30 days. You don't need it. Your ego is gonna tell you that you need it, but you actually don't need it. Doesn't make you profitable. Do you have your own group, Telly, or is it just Arizona? I don't have my own group. I'm in Arizona. I actually created my own Telegram group, but I haven't put anyone in it, and I haven't posted anything in there. I do plan, however, on posting all my setups in there and then posting my lives and other stuff in there. So, thank you actually for the reminder. I'm going to get on that. But other than that, super, super grateful for everyone who hopped on, typed in the chat. If you were on, please let people know in the main chat that they missed out, because you did miss out. Right? If you are struggling with futures and you are trying to achieve profitability or you are trying to achieve a better winning system, again, don't listen to my rules just because you like, oh, Jack makes money. I'm going to listen to him. I follow this strict trading system because it works for me. Because this is what has proven for me to get payouts, proven to me to be consistent on the charts as much as I can. Again, if my setup does not work for you, cool. You don't have to trade like me. You can go trade like other people. You can go trade out your own self. Like, go figure out what works for you, bro. Again, don't just try to trade like me just because you see me doing it. Figure out what works for you. Stop trying to focus on high R to R. Get your win rate up. Get them payouts. And if you are not already funded, you are definitely slacking. You got to get that funded fast, bro. Unless you're like a complete noob and you're very new, understandable. But if you've been in the game for a bit, you are just wasting your time right now. You got to lock in, dial in, and increase your skills. I appreciate y'all. Love y'all. Let's get it.